You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 2nd day of March, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We actually do 2 live broadcasts every trading day. The first live broadcast is our live training room, and that's open from 9:30 a.m. to 11:30 a.m. Eastern. That is reserved for members only and those who are taking their 1-week free trial. The afternoon broadcast, this broadcast, the one that begins at 12 noon Eastern, that's open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways you can join the afternoon broadcast. The best way will give you access to the question box so that you can ask questions and participate in the discussion. Go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. You only have to do that once. Every trading day going forward, what will happen is you'll get an email roughly an hour before the afternoon broadcast starts, and at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform, giving you access to the discussion box, to the question box, so that you can ask questions and participate in the discussion. Now, if you're out of the office, away from your desktop, but you still want to join the afternoon broadcast live, that's a piece of cake. Just point your browser to our YouTube channel, which is easy to remember. You already know youtube.com/CFRN. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive every daily broadcast. Currently, over 2,200 daily live broadcasts archived for your educational and viewing pleasure. And if you happen to be new to the world of CFRN, it's a great way in a short period of time to get to know who we really are. You can scroll back 6 weeks, 6 months, a year, 2 years, even more. Pick a day at random, pick days at random, and just listen in a little bit to a few different episodes. What you'll discover is a thread of continuity, a thread of connectivity woven through each and every daily broadcast. It's a great way to get up to speed on who we are, what we do, how we do it, even why we do it. So with that said, we'll open with a word of prayer, as we do. Now this week, we're talking about finding financial balance. We've talked about planning. We've talked about budgeting. Today's scripture is Luke 14:28 through 33. And I'm reading from the Message translation. Is there anyone here who, planning to build a new house, doesn't first sit down and figure the cost so you'll know if you can complete it? If you only get the foundation laid and then run out of money, you're going to look pretty foolish. Everyone passing by will poke fun at you. They'll say things like, he started something he couldn't finish. Or can you imagine a king going into battle against another king without first deciding whether it is possible with his 10,000 troops to face the 20,000 troops of the other? And if he decides he can't, won't he send an emissary and try to work out a truce? Simply put, if you're not willing to take what is dearest to you, whether plans or people, and kiss it goodbye, you can't be my disciple. That was Luke 14:28 through 33. So today we're talking about counting the cost. First there was planning, then budgeting, now counting the cost. Who is Jesus talking to in Luke 14:28 through 33? And what type of planning is he referring to? Prior to this passage, the crowds were following Jesus, hoping for healing and wanting to hear his teaching. In today's passage, Jesus tells the crowds and his disciples that they need to count the cost if they want to follow him. Jesus didn't want blind, naive commitment that expected only blessings and good days. Just as a builder estimates cost or a king evaluates military strength, a person must consider what Jesus expects of his followers. Being diligent in following Christ will cost you something. You must plan for whatever that cost might be and know that following God through the power of the Spirit will be worth it, both now and in his eternal kingdom. So ask yourself these questions. Have I really committed to following Jesus? What is the cost of taking up my cross and denying myself? And number 3, how can I invest in the eternal kingdom to come? Join me in a word of prayer. Heavenly Father, I want to be a fully devoted follower of Jesus. We're not naive enough to think you're going to make everything in this life sunshine and roses. That is the great hope of eternity with you. For today and all of our tomorrows, may we be diligent, steadfast, and faithful to follow you in all areas of our life, for you have faithfully loved us and saved us. It's in Jesus' name we believe and pray. And everybody said, Amen. Well, happy Thursday. And being Thursday, that means tonight is members only workshop. So if you've been on the trial and you want to be in the members only workshop tonight, go right here, eminifuturestrading.com. Couple mouse clicks, you become a lifetime member with no recurring fees, no upsells, no nonsense, nothing to buy from us ever again. As a passport holder, you'll have 2 hours of live training every trading day. You'll have access to unlimited one-on-one private mentoring. The strategy that we teach you, the indicators that you own for life, are fluid across all markets and all time frames. We're talking futures, stocks, crypto, Forex, from a 1-minute chart to a monthly chart, and every possible tick or range chart in between. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. That never-ending cycle has been in place since the inception of the markets, and it will remain in place as long as the markets continue to exist. So understanding that concept and learning how to put it to work is pretty powerful. Let me give you the numbers from around the world. Start here in the US with the cash markets, or the indices as they're called. Michael will join us about 12:40 and give us a recap of everything that happened this morning in the live training room. And then at 1 p.m. Eastern, we will go live on TradingView, and we'll trade live for 30 minutes. Currently, the Dow is up 78 points, but the NASDAQ is down 59. The S&P 500 is down 9. The Russell 2000 is down 9. So again, we have a market looking for direction. We like to see the 4 major indices all red or all green. Doesn't matter, because as futures traders, we can be long or short and long again, all in the same hour if that's what the chart in front of us dictates. Now, futures trade around the clock, which is another benefit of futures. So those with day jobs still have an opportunity to actually learn how to trade. So we got 3 of the major indices in the red, the Dow in the green. As long as we have mixed markets like that, your trading is going to be a little difficult. In the commodity basket, crude oil is up 21 cents, trading 77.90 last. Gold is down $3.30, trading 18.42 last. Silver down 18 cents, trading 20.91 last. And for silver, that's a drop of almost 1%. In the Asian markets at the close, the Nikkei fell 17 points. The Shanghai fell 1.5. The Hang Seng dropped 190 points, which is almost 1%. And in the European markets at the close, FTSE up 29, the DAX up 22, the CAC up 49. Really no movers or shakers in the whole bunch. It was a red day for Asia. It was a green day for the UK. Not a big green day, but green nonetheless. And as mentioned, we've got diversion in the markets here in the US, with the Dow being the only major index in the green. The NASDAQ, S&P, and Russell are in the red. Not deeply in the red, but in the red nonetheless. Logic 247 is a reflection of the current market conditions. I just haven't felt comfortable putting much out. I don't put them out for entertainment. I put them out to help you learn to spot windows of opportunity in the market. And there just haven't been a lot of opportunities this week or last week. And so that's part of trading, learning to be patient. I mean, hey, you want to sit down, you want to click the mouse button, you want to make some money, you want to go do life. However, you need proper market conditions, and that's something you or I have no control over whatsoever. So when we have days that are trending and presenting us with opportunity after opportunity. Those are the days we really want to take advantage of it. And when the market's not presenting those opportunities, we might want to do something different. This week so far, we're in week 239. Since the markets opened Sunday night, we've issued a total of 18 alerts. One never triggered, still waiting on one. So we had 16 actionable alerts, of which 2 or 13% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, the logic alerts are based on current price action. But when the alerts are issued, there's time built in for you to get the alert, study your 30-minute chart, see the window of opportunity that the alert represents, and then be prepared with your smaller time frame to actually take action as price approaches the entry point, whether it's a long or a short trade. So you have 2 hours of live training every day where Michael is teaching you how to execute your trades. The alerts are designed to show you the logic alerts where windows of opportunity in the market exist. And again, this week, I just haven't seen a lot that excited me. Since we rolled out Logic 247 239 weeks ago, we have now issued a grand total of 13,612 individual handcrafted alerts. And over those 13,613 alerts, or 13,612. Again, we've averaged 20% or less being stopped out based on that risk profile I just explained. Now, our original alert service, the concierge trade alerts, they're a little bit different. Number one, they're based on historic price action. Number two, they don't come out around the clock. They're posted as a static report shortly after the Globex open each evening. Globex opens at 6 p.m. Eastern, Sunday through Thursday. And so it was at 6:20 p.m. last night that these numbers were issued. So all of our members, all of our free trial members, had these numbers last night at 6:20 p.m. Now, because this broadcast is open to the public, some of you didn't have these numbers last night. So if you want to grab a screenshot, there you go. Okay. Now, how do you handle the numbers? First thing you want to do, whatever market you trade, and we'll use the ES as an example. When this report comes out, make note of where price is at this time on your 30-minute chart. If price is above or gets above the 30-minute BBC, it is attempting to reach the long target. If price is below the 30-minute BBC, it is attempting to reach the short target. It's that simple. Look left to spot potential obstacles to the trade. On a long, you're looking for resistance. On a short, you're looking for support. And over time, you'll learn how price behaves at a weekly trading zone. Price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, on your 30-minute chart, doesn't matter what market, price is above the BBC, it's trying to get to the zone overhead. If price is below the BBC, it's trying to get to the zone below. Does it always make it to the zone? No, because as you look left, you'll clearly see where obstacles are that may potentially prevent price from reaching the zone. So after you make note of where price is on the markets you trade, draw a line in the sand at 39.78 and a line in the sand, in this case, at 39.46. If price gets above the BBC and starts trending up, then our strategy is going to look for opportunities to be long the market. If price gets below the BBC and starts trending down, our strategy will look for opportunities to be short the market. In either case, that's where you'll use Logic 247 and everything you learn in the live training room every trading day. 2 hours of live training every day to yourself find opportunities to be long or short the market. Our goal for you is that you become self-sufficient. And I would hope that your goal for you is that you can become self-sufficient. You don't want to have to spend the rest of your life waiting for somebody to tell you when to get in or when to get out. You want to reach the point where you're able to evaluate the purest information, which is the chart in front of you, to make your buying and selling decisions. Now, in the live training room, rules-based trading. That's where you'll learn everything you need to know about executing a trade. Once you master what you learn in the live training room, then if you want to become a discretionary trader as opposed to a rules-based trader, you can. But it's critically important that you learn what's taught every morning in the live training room. So everybody had a chance to grab a screenshot. So let's go to the daily chart, which is where we start each and every day. And it's where I recommend you start your trading day. Doesn't matter what you trade. It could be the S&P. It could be crude. It could be Walmart or Amazon. It could be Bitcoin or Ethereum. It could be the British pound. Because remember, price flows the same across all markets and all time frames. But why a daily chart? Institutions look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It is institutional trading that moves price. Their accounts are denominated in hundreds of millions and billions of dollars. The average retail trader has an account denominated in thousands or tens of thousands of dollars. So by looking at the daily chart of whatever market or stock or crypto or forex pair you trade, you'll have an idea of which way the institutional wind is blowing. On this day, we talked about the potential of the beginning of a major down leg. Price got below the BBC, blue and climbing, turned to red and falling. Price came down right through the 24. But just like with the weekly trading zone, it then retraced back up and then dropped to the 38 again. When the market finds support, it will go look for resistance, which it found at red and falling. And now we're back to support at the 38% fib retracement. We've been in a downtrend since March 29th of last year. We're coming in on a year of a downtrend. The low of the downtrend was put in on October 13th, right here. At 36.14. And so from the low to the most recent swing high, which was put in February 2nd at 42.08 and a half, we've now dropped below the 24% fib retracement. We've tested it from below, and on February 24th, we hit 38 and bounced. but we didn't get much of a bounce. We ran into red and falling, which represents resistance. And now we're day 2, back to back, hanging out at the 38% fib retracement. Now we're off the low of the session, which was 39.25. The next area that we would expect potential support, if we continue down, would be the low put in January 19th. And then that brings us to the 50% fib retracement, which is at 38.68. About 80 points or so lower than where we are right now. But again, this could be just the beginning. After the 50, we got the 62. And then we got that October 13th low. This is the market looking for direction. It's obvious the market wants to go lower, but there's a few institutional buyers hanging on, hoping for better times, better days. But it takes financial commitment for price to rise. All it takes for price to fall is for buyers to hit the pause button. Bought the dip, bought the dip, bought the dip again. But the overall picture is to the downside. So just spending 2 minutes with the daily chart of whatever market you trade will give you great insight into what the overall direction of the market is. Now the 30-minute chart, which we call our roadmap, this vertical line separates today, Thursday, from yesterday, Wednesday. Yesterday, where the market finds support, at the zone to the tick. When the market finds support, it'll go look for resistance, which it found at the BBC. The pullback to the BBC holds more often than it doesn't. So we get a leg to the downside, nice little doji. We bounce up to the BBC, the pullback once again holds. Price gets below blue and climbing, which tells us it's going to turn to red and falling. And then price comes down and hits the short target to the tick. When we hit that target, we catch a bounce. When the market finds support, it's going to look for resistance. Down we come again to the target and through the target. And then we spent hours consolidating at the weekly trading zone. Only 3 things happen at a weekly zone. The most common is this right here, consolidation, 70% of the time. This is rejection, 20% of the time. This was a big red candle all the way down to the zone. But by the time the 30-minute candle closed, the only thing left touching the zone was the wick. So 70% of the time, 20% of the time, and then 10% of the time, price will slice through a zone like it's not even there. When that happens and the move runs out of steam, price will typically retrace to the zone it sliced through and then continue in the direction of the slice. That's a picture-perfect textbook example right there. Now, as the markets traded lower overnight, red and falling turned to blue and climbing. That's our first heads up. The price is going to pull back to the BBC and try to exceed it. We got to the zone, ran into resistance. We dropped back below the BBC, but that was pretty short-lived. We did not. Buyers came in early, pushed us back above the BBC, and we've got a high on the session. Well, the high of the session was actually back here. But real-time trading hours, regular time trading hours, right here is the high, 39.54.50. So price pulls back to the VBC from above. See here we're pulling from below and it holds. Here we're pulling from above and it holds. It holds more often than it doesn't. So we're printing a green candle. Where's the most likely spot to find resistance? 39.54.5. If we overcome that, then we have a window of opportunity up here. Oh, from roughly 39.57 up to 39.63. 6 points, $50 a point, $300 per contract traded. So we hit the target, we pull back up to the target, we got above the target, we hit the target again and again. And now buyers are buying, but how committed are they? Can they overcome this obstacle? If they can, the next obstacle is the high of this candle here at 39.65.5. And then here, and then here. On the Dow, here's where the market opened last night. We were above the BBC, we had blue and climbing, so we ran right up to the zone. Now these zones were published Monday morning at 6:15 a.m. Eastern. We published the zones for our members since December 14th of 2009. So here it is on a Thursday. This was Wednesday. Support, support. Now today, Thursday, resistance. Price gets below the VBC, consolidates for hours, but we've got red and falling, a different dynamic. Once this rolls over, you should anticipate lower prices. And that journey took us right down to the short CTA target. We bounced up to the VBC, resistance, dropped to the target again, to the tick, support. Then we get above the VBC, and we get a leg and a retracement, a leg and a retracement, a leg and a retracement, and a leg. And what we have is we have a high, a lower high, and a lower high. Remember, the Dow is the only one in the green when I gave you the numbers from around the world. On the Russell, here's where the market opened last night. And it dropped pretty quick to the target and through the target. Yesterday on this broadcast, we drew in this window of opportunity. It filled once, it filled twice, and it's now filled a third time. Whole purpose of the alerts is to help you, and when I draw these in on the show, when you learn to spot this, okay, that's when you're getting close to not needing anyone to tell you when to get in or when to get out. Okay, the chart tells you everything you need to know. So price gets below the zone, pulls back up to the zone. Now here's a slice. Pulls back to the zone, it sliced through, continues in the direction of the slice. Then we pull back up to the zone, resistance. Market finds support, sends us back to the zone, resistance, back to the zone, resistance. NQ, here's where we opened last night. We had a gap lower open, which quickly filled. Price got below blue and climbing, took us right down to the target, and look where the candle closed, right at the zone. The zones will become one of the most important tools in your trading toolbox once you spend some time with them and understand how price behaves around them. Again, these zones were published Monday morning at 6:15 a.m. Eastern. Once they're published, they don't change for the entire week. carved in stone. So we consolidate here at the zone. We drop a little below. We take out that early low. Market finds support. We could scroll back and you'll see exactly where it found support and why. And then we go back up to the BBC and hit the target. Down we go again. Back up. Now price is above the BBC. It's trying to move higher, but before it can, it's got to take out this swing high. That's potential resistance. Good area would be roughly 11,964 to about 11,982. That's pretty close. But you see, that requires patience. Waiting for price to get there, or if it fails on the way there, to get back below the BBC so that you can then take advantage of the short opportunity. Chart will always tell you. Crude oil opened here, pull back to the BBC, continue to pull back all the way to the zone, 77.20/25. And then up we go, we hit the long CTA target, and we consolidate at the zone for hours, pull back to the BBC, more consolidation at the zone. Now we're below the BBC, printing a green candle. So you want to wait for price to take out this low, trade it to this low, and possibly all the way down to the zone. Gold did nothing but consolidate the entire session so far at the weekly zone. Remember, consolidation is what you'll see 70% of the time. Silver. Here's where the market opened. The CTA numbers came out. And basically all you had to do was just be short. And it took you right to the target. A 2-penny move is worth $100 per contract traded. This candle opened at 2103, dropped to 2097. That's $300 per contract traded. Price then pulled back to the BBC. The pullback held here and here and here, and then back down to the target. We find support. We get back above the target. Down we come again. Now we're below the BBC, and we have a window of opportunity right there. 2083. I call it 2083 down to 2081. That's 2 pennies. That's $100 per contract traded. On the euro, we opened last night right at the weekly zone, consolidated for a bit, got below the BBC, blue and climbing, turned to red and falling, and it took us right down to the target. We get a bounce, we hit the target again. We then get below this weekly zone after some consolidation. We pull back up to that short target, but we still got red and falling, and it takes us all the way to the next zone. We expect support at the zone. That's what we got. We bounced, but there wasn't enough buying energy to get us all the way to the BBC, and now we're continuing that downtrend. So down in this area here, nice window of opportunity. Let price get below that low. That brings us back to the daily chart where the indecision continues. Okay, Michael, are you ready? Again, tonight is a members only workshop. Make sure you have your questions ready. And if you've been on the trial and you want to be in the workshop tonight, go to eminifutures.trading.com. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. Traders in the audience today have lost more than what, I'm talking individual traders, have lost more today than what it costs to become a lifetime member. With no recurring fees, not weekly, not monthly, not yearly. No new shiny objects to buy from us, ever. No nonsense. All the stuff you've dealt with over the years, going from room to room, from one thing to the next. All right, looks like Michael's here. Michael, do you have your audio on?
Now I do. Now
Good.
I do. I have to put the second switch on.
Good job.
Okay, I gotta correct my name here too. There we go. We are good to go with that.
All right, looks good.
All right. Thank you. Let me get to this right here and click on that. All right, here we go. Good afternoon, everyone. Today is Thursday, the second day of March 2023. Now, if you've not taken a free trial list and you want to, go here to mytradingiq.com. Right here is a Sun free 5-day training now, 9:30 to 11:30 Eastern Time. Click on that, and you'll be brought to this page. Just fill out this form, and then be sent everything you need to get into the room in the morning for your 5 days of training. All right, if you are going to do that, you should go here, go to the trading platforms, and download whatever trading platform you use. You're going to be seeing me use DT Pro and TradingView right here. But go download whatever trading platform it is that you use that we have our things on, and we'll be happy to assist you in getting that running. You need to do that at the beginning of your trial. If you don't do that at the beginning of your trial, then you're really missing out. All right. Okay, results. Now, today, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the second day of March 2023. Today, we made 55 ticks in the NQ, 13 ticks in crude, 12 ticks in gold, and 13 ticks on the ES. That put us at 756.25 in the morning session. Today, it took 5 minutes and 3 trades to get to the goal for the day. At that point, we're up $300. We took a total of 30 trades this morning. Took a whole bunch of trades, most of those on the NQ this morning. All right, so those of you guys who are in here who are actual partners, or those of you guys who are in here who have been watching for some time, I introduced again today the continuation trades. I'll get into that in a few minutes, but just briefly. Those of you guys who are partners, I'll get into in the partners meeting tonight. But anyway, on the month now, we're at $1,281. That's over 2 days, averaging $640 per contract per 2-hour trading day. We've now gone 40 out of 41 days this year, getting our goal, and we've gone 10 days since our last blue day, 388 days since our last red day. Those are business days. Okay, so now on the year, we're at $16,081. That's over 41 trading days, averaging $392 per contract per 2-hour business day. If you were to quit trading when you got your goal for the day, and you were to add 1 contract a month, so like right now, we'd be doing 3 contracts. I did that this morning, both days this month so far. And I quit when I got my goal at $100 each day, $100 a contract with 3 contracts on. That puts me at $600 on the month. But if you were to do that, quit when you get your goal for the day and add 1 contract a month, so far this year, you've only had to work 11.13 hours this year. And you would have averaged $661 per hour. Per hour, yeah, that's right. $661 per hour. All right. Look at that. It's 668 minutes. So it's about $1 a minute is what you would have been averaging on the year for your work. And that's, well, that's, I'm sorry. Is that right? No, that's not right. $661 per hour. We'll just stick with that. Dollar a minute is not near enough. That's like 1/10 of what it should be. All right, so let's get into the trades, get into the actual trades. Okay, this is GT Pro. Let me bring my loan back up, sorry. If you were trading with the GT Pro today, you did not get many trade setups at all. All right, I went through that at the end of the room this morning. There are not that many trade setups at all with the GT Pro. With TradingView, we had a nice trade right here. This was off the ribbon. Our very first trade on gold, what did we get? We had 7 ticks on that trade, and we had 1 tick on that trade to get us. This is where we got our goal for the day on this one. We had 8 ticks on gold, and we had 2 ticks on crude at the time. We got 4 more ticks here to get us to plus 12. Then we had a break even there. Then we had 10 ticks there to get us, 9 ticks there to get us to 21, I think. Went from plus 12. I'm sorry, we had 10 ticks there to get us to 22. And then the next one we had was over here. We stopped out, brought us back down to 12. All right, and then we didn't trade anymore in the gold. During the break, there was 1 trade. Well, there was a continuation trade right here during the break. Actually, you want to get it at the top of it right here. You don't want it to be the 3rd or 4th trade down, leg down. But there was a ribbon trade right here during the break where the black was in the red, and long-term direction was bearish. Okay, easy trade to take right there. So we ended up with plus 12 on the gold. The crude oil now, we'll look at that one. I just saw something that caught my eye. This, what does this do? Oh, okay. Anyway, back here. In the crude oil, our first trade of the day was right in here. We had 2 ticks profit on that. Then the next trade was right here. We got 10 ticks profit on that somehow. We went from 2 to 12. And then right here we had a good one, went from 12 to 29. Is that right? 12. Yeah, we went from 2 to 12 to 29, then down to 11. How did we go from 29 down to 11? Something doesn't look right. But anyway, and then went from 11 to 13. Went from 2. Is that a 12 or is that a 4? I can't read. But anyway, we ended the day with 13 ticks. All right, we had that. I know we got just a little bit 2 on the first one. I think we got 10 to get up to 20 to 12. And then we had a big trade right there, it looks like. And that got us, I guess it got us to 29. Then I have 11. I'm not sure if I have 11. I guess it's a stop out right here. All right, we stopped out there, and somehow it was more than 10 ticks. So I went from 29 down to 11. I don't exactly know how I did that. Then we had a break even there. We went 2 more ticks in profit here to get us to 13. Then we had a break even there, and then I didn't count whatever that was. And I didn't count whatever that was. So I guess we did a lot better on the crude than I thought we did. Well, than I wrote down anyway. But I wrote down we ended the day with 13 ticks, and it looks like we probably ended the day with about 30. But during the break, let's see what else we had going on in here. We had this off of the ribbon right there during the break. This one would have been the continuation trade during the break. For those of you guys who don't know what the continuation trade is, it means when the black is not in the right color, as long as it's not in the opposite color, down here in the slingshot, if you have the lead line, which is the white line, crossing out of the oversold and over the green line, this line right here, green or red line, crossing over the other line as you get your trade entry, like right here. You see the black was not in the green on the up close right there, but you got that cross right down there. Move it over here so those things aren't in the way. But you got that cross right down here. You got the up close. All right, that's an okay trade to take. It was at the end of the session here, so I didn't take it this morning. But during the break, that would have been okay to take. There was one more trade right here you could have taken during the break, and that was about it. So we ended up, I have down that we ended up with 13 ticks, but we ended up with a lot more than that on the crude. Not exactly sure what we ended up with, but sure it was way more than that. Yeah, it was a lot more than 13. It was actually 34 ticks is what we ended up with. I don't know that actually shows the right ticks. Now it doesn't show the right number of ticks. It shows the right number of dollars. Okay, so somewhere around 34. Anyway, that was crude oil. All right, on the ES now, let's look at the ES. We started out with a couple of break-even trades here on the ES. One there, this was a continuation trade you see down here. If it doesn't hit the ribbon, or if the black is in the gray, then you can take a trade using the slingshot, okay? This right here was another trade here. You could have taken that. I didn't. I took this one in our first trade on the ES. I picked up, well, either picked up one. No, I picked up one on the first trade, and then over here I picked up 6 more. I had a break even there. I missed that. Picked up 6 more there to get me, 4 more there to get me to 5. Then I missed a trade there. Somewhere in here I had a really good trade because I went from 5. I'm missing something here. Did I get 15 on that first trade? That's what I think I did. I think I got 15 on the first trade, and then I got 8 on this trade to get me to 23, and then I stopped out and put me down to 13. Wow, my numbers are all over the place this morning. Anyway, I ended up with 13 ticks on the ES, and I'm pretty sure that is correct. During the break, the continuation trades, there was one right here where it didn't hit the ribbon, but the lead line crossed through that on the way down. There was another one right here, same thing. Now I didn't take any of those trades and didn't count them, but those happened during the break. All right, and that was it. Long-term direction got flat in here, so no trades, and it's flat again, so no trades. And that was the ES this morning. Now the NQ is where we took the majority of the trades. Okay, so for those of you guys, I don't know how many people are in here right now watching this. Let me go check out and see who's in here. All right, so we'll go all the way back to the beginning on the NQ. We had a bunch of trades on the NQ today. And again, I did the NQ on the 16 range. It was doable today, but it was still really, really fast at some points. And I just had to shut it off and stop looking at it. But here, we get in here right now. Our first trade on the NQ was right here. We stopped out. We're minus 20 ticks right there. Our next trade was right here. And we picked up 8 points, it looks like. So we went to plus 12 at 32 ticks there. Had a break even on that one. Then went from plus 12 to plus 36. So we had 20 ticks. I'm sorry, 24 ticks right there, 6 points. Then we had, oops, let me do that. Then we had, scrolling over here, we had a big trade right here. Went from 36 to 68. I followed up with a break even and a stop out right there. And another stop out right here. So we went from somewhere here though, we went from 68 to 77. Somewhere in here. I don't know where it was, it might have been right here. Went from 68 to 77. Actually, I didn't get that one. I know some of you guys got that one. I remember that happening and I didn't get that one. And some of you guys got like 40 or 50 ticks on that. But there was something else in here where it might have been right in here where I went from 68 to 77. And then I had the 2 stop outs. I stopped out 20 ticks there to 57, 20 ticks there to 37. Then I had a break even there, a break even there. And on this one, I went from 37 to 45. So I had 9 ticks there and a break even there and 10 ticks there to get me up to 55 and another break even there. And it looks like that was all I did. Now, if you're just doing the trades off the ribbon with the long-term trend, there was one there, one there, one there, one back here. So that was during our time, but during the break, there were a few right here during the break. Then it flattened out, started to go up. There was one right here. And one right now. Actually, the long-term trend is flat, so you can't really do that one. So there were a few decent trades just doing that. Now, if you look down here at the bottom, long-term trend is bearish. So all you're looking for down here at the bottom is for the lead line, the white one, to get out of the middle, to get into the overbought, and then give it down close, okay, and cross the line. There's one right there. There's one right there. That happened to be a trade. There's one right there. That would have stopped you out. followed up by one. That would not have been one because the black was in the green. Same thing there. And so now it's all flat here. Long-term direction is flat. So you get in here, you start looking the other way. Now that one was not one, but was that one? Yeah, I guess it did cross it right there. So you would have had a break-even trade there. That far away from the midpoint, you're kind of asking for it. It gets a little closer. It's a break-even trade right there, but as it continues over here, you can see the black was out of the green right there, but you had your cross down here, and that would give you a little bit of something. Then it got flat again. You didn't want to do anything there. This was off the ribbon, normal trade. This right here would have been a continuation trade to grab that. So there's just a lot more opportunity, and just throwing the NQ into the mix adds more opportunity. And if you look at the current daily average right now is $640 a contract, and we ended last month with $340 a contract. What's the difference? One is I added the NQ, that pretty much doubled everything, and I added the continuation trades. Okay, Michael, I don't have a lot of time to go back to 1050, but I will. You were talking about the NQ. You gotta be quick because I have 3 minutes. Okay, back here, about 1049. And right in here, you needed to have this cross up right here. Okay. The one that I took, this one back here at 1048, right here. Yeah, that was just regular off the ribbon there. The black was in the green, everything was good. Why not take that? It was an up close. Long-term trend is up. That's why I took that. You didn't need this. Okay. You didn't need the slingshot on that one. Okay. This one would need the slingshot. This one you would have needed the slingshot. This one you would have needed the slingshot. And you only had the slingshot on that one and that one out of those two. And they both worked out. They all worked out, but this one would have been no trade because the slingshot wasn't right. Okay. All right. So I want to remind everyone to get into the live stream that I'm going to start here in about 2 minutes. Go to TradingView.com and go to, I'll show you on another monitor here. If you go to TradingView.com, I guess I can do it right here. You go to community when it comes up. You don't have to have an account with TradingView, I don't think, to go watch this. Go to community, go to live streams. You may have to have an account to actually type something in. But you can go there, and we're going to be down here at the bottom. This one, we're going to start this in 1 minute. Okay. If you click on that, you'll be able to watch it. And I think it'll be somewhere up here on live streams or something like that in just a minute here. Okay, so if you haven't taken the trial with us, go here to mytradingiq.com, and here, all you need to do, click right there. You'll be sent all the information that you need. If you're going to take a trial with us, you download the trading platform. Okay, you should definitely download the trading platform. All right, so let's get this over here, and I'm going to start the stream right now. All right, it is 1 o'clock, so let me hit refresh on this page. If anybody has any questions, you can email support at mytradingiq.com. You can contact me directly if you want to. Well, support at CFRN.net or support at mytradingiq.com. They both go directly to me. Okay. All right, so I'm going to start the stream right now. And it's live. There we go. All right, so now what we're looking for, I'm going to hit auto on this. We have the NQ going here. We have the ES7 range. The NQ is on a 16 range right here. That means every bar on the NQ is 16 ticks high. All right, so what we're looking for is the long-term direction to either be bearish, like this one right here. Long-term direction is the outer bands. If they're separated and going down, that's bearish. If they're separated and going up, that's bullish. We don't really have a good bullish look right here. But if they're separated and going up, that's bullish. Right now, there are what we're looking for, the most conservative trade that we're looking for is something like this right here. Right, we're on gold over here. The long-term direction is bearish, right? And price pulled back up into the ribbon. The ribbon are these lines in the middle, with the black being on the top of the ribbon, and in the red, you can take any bounce off of the ribbon. That means the price goes up and hits it and gives a down close. All right. The NQ has a trade right here, a continuation trade. I talked about those in the meeting leading up to this and earlier today. This is a continuation trade on the NQ. All right, so I just threw my stop at break even. After I get 4 ticks in profit on the trade, I throw my stop at break even. That's on the NQ because I'm using a 16 tick range. We're gonna lock in 4 ticks on this. And looking left on this, I don't really see where it should go. I'm gonna slide this over to the side for just a second. Now I have 4 ticks locked in on this, but I'm gonna make this a larger time frame and look left on it. Okay, and see if we can find some good spot for this to get up to. So we're trading right in here right now, and I would say 34, possibly up to 45. Okay, it just took us out with our 4 ticks right there. And I'll bring my down back over so you can see it just took us out. But I'm going to enter again if it gives us another trade setup. All right, it hasn't done that yet, but it possibly could. No, it's not going to. It possibly could again. Possibly could again. This would be a continuation trade. So we got on the first trade, which was right in here, we picked up 4 ticks profit on that. I would have grabbed some more if I'd have been paying attention to it, but it was actually right in here. All right, so now if we get an up close and the lead line down here crosses up into the midsection and it crosses the UC line at the same time, then we have a long trade. Okay, over here on gold, it did not pull up into the ribbon, so we don't have anything going on there. See, now this is not going to be a trade here on the NQ, but we did get a little bit out of that very first trade. And that was actually from right back here, somewhere in here. I took that trade from. We're on a 7 tick range. That's why it's not looking normal. Okay, I went back to the 7 range. That should be 16 range. Right here is where we took that trade from. Right there. Okay, that makes sense. So what the heck? That was our first trade right there. Okay, and yeah, thanks for pointing that out, Brian. All right, so we are streaming live right now on the TradingView as well. Okay, if anybody over there has any questions, just type it into the live chat. Okay, if you have any questions on the TradingView, type it into the live chat, and I will be happy to answer it for you over there. If you want to see any equities, anybody wants to see any equities right now, just type that into any one of the chats that we have going, and I'd be happy to show you equities as well. This is another trade right here on the NQ, but I can't find my DOM, and I just jammed that in the wrong place. There. Slide that back over here if I can. Okay. Excuse me. So what I'm looking for is for price to pull back up into the ribbon. The long-term direction here is bearish. That's good. Right here it's kind of flat, so you don't want to trade. Right here it's not flat right now, but if price pulls back, that probably will turn flat. Okay, so you want to be careful trading in there. And even right here on the NQ, you know, we did actually put in a higher swing right there, and we should actually put in another higher swing right now. If it pulls back and hits the ribbon right here like it just did, and we get an up close on this, then I'm going to go. Now, this is a 16 tick bar. That means the top of the bar is going to be 4 points above the bottom of the bar. So right now, 1926 is 4 points above the bottom of the bar. Okay, so I can be proactive like that because I know how big this bar is going to be. Now it's 21.25, so it's going to be up here at 25.25. I want to go actually one more tick than that. Now you see it's getting way down here at 1950. So it may pull back too deep. If it pulls back too deep, we're not going to take a trade on this. Okay, but now we're looking at 1950 up to add four ticks. 4 points. It's going to be up to 23.50. And I want to go on an up close. If it closed up at 23.50, it's going to fill me here, hopefully around 23.75. Okay, and there it is. It did fill me at 23.75. So that's a good long trade right there. And where should it go? It should probably go up here to 31.50. All right, now after I get 8 ticks in profit like that right there, I'm going to throw my stop at break even. And now I'll throw a target all the way up here at 31.50. Okay, and so now I got to break even on this one. But 31.50 is where I think this is probably going to get up to. Okay. All right, I know that was a lot of stuff really fast. Does anybody have any questions about that stuff that I just said? Does anybody want to look at any equities? Actually, right here on the ES. We're going to take a long right here on the ES right now. Okay. This one, it actually came down and hit the ribbon. We've got a little bit of bullish separation here. This is bullish separation. We came down and we hit the ribbon. We gave an up close. So that's okay to take a trade there as well. Let me get back over here for a second. Let's see if anybody typed anything in here. Not quite yet. Okay. So we're waiting here on the ES. Every trade starts out with 10 ticks of risk on the 7-tick range bars. So in these 3 markets, every trade starts out with 10 ticks of risk. So it's probably going to stop me out. It just did stop me out on the ES. On the NQ, right, it's a 16-tick range bar, so I have a 20-tick stop on the NQ. All right. So let me put this stop out here on the ES. It's right here. I was feeling kind of cautious about taking the ES trade because the trend isn't really strong right here, but we only have so much time, so I was taking what we can get. Okay, over here we don't have a trade here on gold. We don't have a trade here on crude, so we just have to wait a couple of minutes. All right. So I know since I turned this stream on, I've been talking nonstop. The rules for the trades are pretty simple. Let's look at gold since that seems to be the clearest one of all of them right now. The long-term trend is this outer band. Okay. Now all these things that you see inside here, they're all little like crutches to help you pick the highest or most conservative trade if you want to, the highest probability trade if you want to. You're gonna have to wait for that to happen to get the get trades that happen more often. Then you're gonna have to give up some of the some of the level of probability, I suppose. Some percentage of probability. I don't actually do anything in percentages, but I know if you come up here and you hit the ribbon, you get a down close, and you have the slingshot working with you, that is probably the highest probability trade you're going to have. If you hit the ribbon without having the slingshot going with you, that's also a very high probability trade. If you don't hit the ribbon and you have the slingshot going with you, that's probably the 3rd highest probability trade. If you want to look at it in those terms, these are trades that we took this morning. Okay, in the room this morning. So we took a long there, which was good, a long there, which was good, a long there, which was good, a long here, which was a break even, and a long here, which was good. Those are what we did this morning in the room. And right here, you see we don't have anything suggesting we should short right here. It didn't hit the ribbon, and the slingshot is not giving us what we need to take a trade. So we just have to wait. Okay. Does anybody have any questions about that? I know some of you guys, like Bobby, is Bobby in here right now? He was asking this morning about the rules for all this. In a nutshell, you want the black line to be in the red when you take a short. You only want to take shorts when the long-term direction is bearish. The black line is in the red. Price comes up and hits the ribbon, gives you a down close. You definitely only want to take shorts on a down close. All right, now a down close is a close at the bottom of the bar. These are range bars, so every bar has to close either at the top or at the bottom. You can't have a bar that closes in the middle. Every bar closes either at the top or at the bottom, okay? So for a short, the bar has to close at the bottom. For a long or a buy, the bar has to close at the top, okay? Right now, we just don't have any trades right here at the moment. With these 4 markers, you'd think you'd have something, but we don't. So far we've had 1 NQ that worked out, 1 NQ break even, and 1 ES that stopped out so far. This morning in the room we were plus, well, we're actually better than on crude. We're actually plus, when I say 34 is what I ended up with. I wrote down 13, but I ended up with 34. On gold we're plus 12, on NQ we're plus 55, and on the ES we're plus 13. That was in the room this morning. If you want to get into that room in the morning, if you're in here right now in the live stream, you want to get into that room in the morning, just take the free trial. All the information is there for you to take the free trial. Go to mytradingiq.com and sign up there. With TradingView, it's really easy to get your chart set up. All you have to do is give us your profile name. It's this thing right here. Okay, just give us that profile name, and we can get you set up in just a matter of minutes. All right. Can I cover the significance of the green and red shading in the slingshot? And is it appropriate for this session? Well, yeah, I can cover the significance of it. That originally, Bobby, originally that was what you're seeing in here anyway. I don't think I ever changed it. That does actually show when the white line, when the lead line crosses the green line coming out of the oversold or out of the overbought. It's what it was intended to do originally was to show when it crossed that at the same time as crossing the lead line. I think I changed the code around a little bit to make it mean something else, but that's what it was about to begin with. Now there's another thing that I have in here. Let me show you guys. Let me show you just something a little bit different. We don't have any trade setting up here right now. The closest thing we have to a trade right now, it's probably the gold. So I won't do it with gold. I'll do it with the ES right here. If anybody wants to look at any equities, if anybody wants to look at any, Ronnie just learned something new. Woohoo! If anybody wants to look at any equities, just type in the symbol that you want me to look at. Okay. All right. So what I wanted to show you in here, if I take all this stuff off, right, if I get rid of all these things, now we're just left with the shading in there, right? We have the shading in the long and short-term direction, the long-term direction. Now, what you were asking about, Bobby, was what the shading means in the background. The darker inside is the short term on top of the long term. So if you have bearish separation right here, the darker is the short and long term on top of each other. And as the long term, as they start to separate, the short term gets outside the long term below it, then that is the short term sticking out the bottom. You have the long term hanging out on the top. And it switches back and forth. But ideally what you want is the black line to be in the right color when you take a trade. Okay. I just took the black line off. What I wanted to show you here was what it looks like without the context at all. And I want to show you one more thing. If I take the context off too, and I want to show you one more thing. This, you see all these little arrows. These arrows, based upon what's going on down here in the slingshot, that's what they're looking at. Looking at the long-term direction. If the long-term direction is bearish and the lead line, the white line, is overbought, you're going to get an arrow. Now the arrows occur usually on the bar before the actual trigger. Okay. They usually occur on the bar before the actual trigger. If you look at the bar after all these arrows, the down arrows right there, or the bar after all these up arrows right here, they usually occur on the bar before the actual trigger. So you got to have all the other things that come into play that you're looking for to actually get the trade. All right. But they're like a heads up. They're saying, hey, pay attention. Okay. That's what they're saying. And let me put all the other stuff back on and we'll get back in here to trading. Okay. But if any of you guys want to learn more about this stuff, show up in the morning. Again, mytradingiq.com, sign up for the trial. And we'll teach you all about this stuff. Right. So as far as the trades going right now, this was actually a trade right here on the ES. That was a continuation trade right in here on the ES. It should have been from the up close right here, this up close right here. Okay. Where the white came out of the oversold, crossed the line right there, while the black was not in the red. Okay. Yeah, that's the only one we got going on right now. All right, so you want to look at Walmart. Let me go and look at Walmart for you. Here, look at it right here. Do WMT and stocks and Walmart. And we're not going to look that on a 7 range. Dwayne, you got to do this. I'll go look at it on a 100 range. Okay. Put that on a 100 range. That means every bar, hang on, let me hit auto on that. Every bar is $1. So Walmart has not signaled anything since February 23rd when it came off of here. It said to go short here at 41.65. That was the last thing that it said to do. If we look at it on a smaller time frame, we'll find something else. I'm sure something a little better. Got that time frame in half. And here, just today, Walmart said to go short here at 40.22. Coming down here off the ribbon, okay, right here. And you even had the slingshot going with you. So what would I expect out of that? 40.22, 40.20, yeah, 40.22 would be the down close, so it won't take below that bar. All right, so let me type that in. All right. WMT suggested a short at, what was it, 140 on the down close of this bar, which happened at 946. Okay, that's what we had going there for Walmart. That's on a 50 tick range. All right, I'll type that into. Okay, that's what Walmart suggested. Let's go back to the ES now and see what's going on here. Maybe go to futures. Does anybody else want to look at another equity? I'm happy to jump and look at equity if you want. Any equity or ETF or anything you want to look at. Let's bump this back down to a 7. Okay. All right. So back in here. So far we have one stop out on the ES. We have one profitable trade there, one break-even trade there. And I didn't do anything anywhere else yet. It's looking like we might potentially get a trade here on the crude oil. All right. It's got to pull back and then give us an up close, but there's nothing here on the ES right now, and there's nothing here on the NQ yet. Right? Tesla. Okay, again, let's go look at Tesla. I'll look at here on this one again. Okay, let's just do Tesla, and we'll go to stocks, Tesla, and that one. We'll do that on a 50 range. Okay, so Tesla, if we get an up close on this bar right here, Tesla will be suggesting a long, but let's look at it on the 100 range and see if it already did suggest a long earlier. Okay, the 100 range is suggesting nothing. It's saying don't do anything right now. It did suggest a short back here a little while ago, and it did go short. It's not really suggesting anything right now. But the 50, if we go back to the 50 range, the 50 on an up close of this bar on the 50, Tesla would be saying go long. All right, so that's going to be up at 90.04, 190.04 is where the up close would be right now. All right, that's what it's suggesting right now. Okay, Ken. It's going to have the up close though, so I'll type that in. Is it 190.04? And that long should go up to we'll have to see if the bar closes up, but it looks like it's going to. And if it does close up, then it'll be an opportunity to go long there. Now let's jump back over here. I don't think the ES is going to do anything because the NQ is not really moving around all that much. So we could watch Tesla. All right. If anybody else wants to look at anything else, happy to do it. Just give me another symbol. All right. ES, we'll go back to the age contract, and we'll go back to the 7 range, and we still have nothing here on the ES. So that was okay to jump away from. Ronnie, you texted me that you wanted to meet. We'll have to set that up. Okay, I do have another meeting coming up here already this afternoon, just half hour or so. All right, so on the crude right now, we have long-term direction is bullish, right? Long-term direction is bullish. The slingshot is setting up for a possible move up. We need to get down here and get into the ribbon for us. Okay, that's what we're looking for there. Okay, over here on gold, the long-term direction is bearish, but it's all choppy and sideways right here. The one trade that could have been done would have been right here, and that was before we got on. That was during the break. Right, so it's 1:21. We've got about 9 minutes left in here right now, guys. And so far we have one profitable trade, one break-even trade, and one stop out today. I'm gonna go back and look at Tesla in a minute here, see what it did, because it looked like it was about to give us that up close, didn't it? All right, this is just a bunch of garbage right here. You can't trade that. You can't trade that. And the crude is pulled all the way back down to the ribbon. So we need no close here on the crude, right? At 77.92 would be buying 77, 78, 78 even on the crude. Okay. Now I can put this order on ahead of time because this is a 7-tick range bar. I know what the bottom of the bar is, so I know what the top of the bar is going to be. Top of the bar is going to be right here. If we get the up close right there, I want to be 1 tick above it, so it'll trigger me right into the trade. Okay. So you can be proactive with your orders this way. Right? I know if we get an up close on this bar, the ribbon is going to be touching the bottom of the bar, and we're going to be having a long opportunity. The long-term direction is bullish, so everything is right. Okay, everything is right with this. It just has to happen. If it closes down, then that's going to change things. Okay, then we're going to have to wait for something else to happen. Over here on gold, it's almost pulled up into the ribbon. This is really sideways choppy stuff here on the gold. So we'll just have to see what happens with that. All right. All right. So it did close down. Now things are changing down here. The dynamics are changing with this. You see the black line is about to get out of the green. So that means you have to have the slingshot to agree with the trade to be able to take a long trade. That would make it a continuation trade. And you guys who are partners who are curious about that, show up at the meeting tonight, the partners meeting tonight. I'll be talking about that in the meeting tonight. But 85 right now is the low on this. And we can't put the buy stop on yet because number one, I don't know if the black is still going to be in the green. If I knew the black was still going to be in the green, we could take the trade. Number two, I don't know if the white line, if the lead line is going to cross up out of there or not. Right? I think it probably will, but I can't tell. This is the one thing about TradingView that's, it doesn't, the indicators don't react tick by tick. Right? So what you see is what you get because the bar is closed by the time you see it. So in this case, I have to wait for the up close. All right. Normally, I'd be able to see if I had one of the other platforms going, I'd be able to see that tick by tick. But it's, they have that. They have it for strategies. TradingView does. They do that for strategy entries, the intra-bar entries. I don't know why. If they have that capability there, I don't know why they don't have it for indicators. But well, I don't know. Yes, we will be recording the evening meeting, Marco. We always record those partners meetings. It'll be out there when you wake up in the morning. You and Daniel. Okay, Val usually gets them out there about 30 minutes after they're done. So this bar did not close up, and this bar looks like it's going to close down. So that doesn't look like it's going to end up being a trade. Now let's go back and look at Tesla. That's what we were curious about, right? If that was going to give us the up close or not. And that was on a 50. Was it on a 50? What did I say over here? Tesla up close at 190.04. It did give us the up close at 190.04, and it did run up to here, 190.40. Okay, so it didn't go all the way up to here yet, but it did give the up close, and it did keep going after the up close for a quarter. You want to look at the yen. Okay, let's look at the yen. Right, so we did get a move after we got the up close. We did get the move there on the Tesla. It didn't go up to the 65 yet. That's where I thought it was going to go up to, but it only made it up to 40 so far. Another up close on this bar would be the same indication. Okay, so let's look at the yen. 6J. Oops. Unclickable. Here. Hang on. The crude. But I lost my crude DOM. Hold it. Crude. Here it is. I just missed it. The crude had to, this up close right here was a long trade on the crude. It's too late to get into it now, but this up close was a long trade here on the crude. I'll highlight it for you. It's right here. That was a long opportunity on the crude. The black actually stayed in the green on the up close, so you could have just taken it that way. And you got the cross down here. So this is really likely a really high probability trade. It's probably going to make it up here to 78.12. Okay, so let's go back here. And you want to do 6J futures, Japanese yen, H. Okay, and we'll look at that on a 7 range. And this is what the yen looks like. All right, it's not looking real pretty in here. Dwayne N. Yeah, I had some nice trades in here earlier, off the ribbon right there and there. And whenever you get one of these arrows, you can look down and see if that's an actual continuation trade, and it is in that case. And in a lot of these cases, where you get the arrows, it's going to be. That's something that you guys. When I talk about it in the meeting tonight, I'll show you guys all this stuff in the meeting tonight. An $18 gain on Tesla. Nice. Nice, Ken. Was that from what I just gave you? No, I don't think so. All right. So it is now 128, and this is what the yen looks like. If I blow the yen up right now, look at it like this. You can see there were all these opportunities today on the yen off the ribbon. Yeah, the long-term direction was down there, here, here. Then the long-term direction changed to up, there, there, there. It's changing back to down now, so you don't have anything in there. But those were the trades on the yen this morning. Okay, Dwayne. So we had, so there were 5 to 6. Nice trades. All right, so this was my ES. Go back to ES, put it on the H contract. Still nothing happening here with the ES. And we didn't end up with a trade on gold. And this would end up being a break even. This one right here on crude if I had taken it. And all the other markets are just sideways. So I guess that's how we're going to end up wrapping it up for today, guys. Again, if you have not taken a free trial with us, go to mytradingiq.com, right? mytradingiq.com, and that is where you can sign up for the free trial. All this stuff, I'm happy to go over any of these things anytime. In the morning session, of course, everything's kind of crazy because the markets are jumping around a lot faster than they are right now. But just ask me the questions in the morning session. I'll go over them as soon as I can. All right, guys, that is it. I'm going to wrap up this live stream. Thanks for coming today. Thanks for the questions. It always makes it entertaining. Again, go to mytradingiq.com to sign up for the free trial. You should definitely give us your profile name for TradingView so we can get your indicators running for you as soon as possible if you take the trial. All right, thanks for coming. All right. It is back out to fabulous Phoenix, Arizona in Studio A overlooking South Mountain, America's largest city park. There it is. Perfect. All right. Dwayne, I don't hear you yet. I see you, but I don't hear you.
I said good job, and on the morning session, recap of the recap.
Recap of the recap. It was 5 minutes, 3 trades, $300.
Good job.
Thank you.
All right, guys. If you want to be in the members only workshop tonight, go here to eminifuturestrading.com if you're not already a member. This is a lifetime membership. The passport is your all access pass to everything we do, everything we've ever done, and anything we do in the future. 2 hours of live training every day, unlimited one-on-one private mentoring, the strategy you learn, the indicators you own for life are fluid across all markets, all time frames, You receive the Logic 247 alerts, the Concierge Trade alerts, and of course you'll be in the Members Only Workshop tonight, every Thursday night. So 2 hours of live training every morning, Monday through Friday, and then 2 hours of Members Only Workshop every Thursday night. All that and much more. It truly is everything a trader needs, all under one roof at one low price. And in Telegram, we have a very vibrant community where you as the newcomer will be welcomed, championed, and helped every step of the way. Around the clock support. Something you just won't find anywhere else. 9 out of 10 new traders fail because they don't have anyone to teach them how to do the job. Well, I bought books, I watched a ton of YouTube videos, nothing wrong with that, but they're not a replacement for a living, breathing teacher putting on taking off trades live in real time, explaining every move they make, every trade they take, and the rule behind it. While you trade along in sim until you qualify to go live, and you asking lots of questions so that you learn the strategy quicker rather than later. So, EminiFuturesTrading.com, it's a real simple web page, 2 mouse clicks, lifetime membership, no recurring fees, no upsells, no new shiny objects to buy from us ever, no nonsense. 9 out of 10 new traders not only don't have a teacher, someone to show them how to do the job, they don't have a business plan, they don't have a trading plan, they don't even know they need one. Our 2420 blueprint is designed to help you to go from 1 to 20 contracts over a period of 24 months. Also in the blueprint, walks you through the process of creating your business plan and your trading plan. 2 very different documents, 2 very important documents that you need. Let's wrap it up with our good word for the day. Starting fresh every day. Proverbs 14:17 says, a quick-tempered person does foolish things. You overslept, the car wouldn't start, you were late for work, and your computer crashed. These things can make you angry, but only if you let them. Solomon said, a quick-tempered person does foolish things. So if you fly into a rage, expect a rough landing. The Bible says in Proverbs 16:32, he who is slow to anger is better than the mighty, and he who rules his spirit than he who takes a city. Anger always comes back to bite you and ends up doing more damage than the thing that triggered it. David said, my voice you shall hear in the morning, O Lord. In the morning I will direct it to you, and I will look up. Psalm 5:3. Start by offering your day to God. Then you will be less likely to react in anger when things go wrong. Our time here is short. What a shame to let something that happened 20 years or 20 minutes ago ruin your day. Make up your mind to enjoy every single day. You might make mistakes. Things may not go your way. You might be disappointed. But choose to live a happy life rather than let what does or doesn't happen steal your joy. Every morning, say, Father, this is going to be a great day. I thank you that I have discipline and self-control and that I make good decisions. I may not have done what I could have yesterday, but that day is gone. I'm going to do better today. Ever wonder why a car's windscreen is big and its rearview mirror is small? Because what's behind isn't nearly as important as what's ahead. So keep looking ahead, and no matter what happens today, don't lose your peace. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.